Hello, everyone, and welcome to this episode of Ignition Time. There's a lot of confusion about filing amended tax returns. What do you do if you still haven't filed your taxes? What do you do if you filed your taxes and are now expecting a refund check from the federal government, specifically from the IRS, if you collected unemployment benefits in 2020? We're now going to jump right into that. Here's a new article on your screen from CNBC. This stimulus package changes tax rules mid-season. What to know about filing an amended return. Now, before I dig deeper into it, I want our viewers and subscribers to know that if you collected unemployment benefits in 2020, this applies to you. And more than 40 million of our fellow Americans collected unemployment at some point or another in 2020 because they went on unemployment and then they went off unemployment. That's the first factor. The second factor is the first $10,200 in unemployment income. I use the word income because traditionally it's taxed as income. But the first $10,200 in unemployment benefits are not subject to federal income tax as long as, and this is important, as long as the adjusted gross income of the household was under $150,000. Chances are you qualify because a majority of our fellow Americans fall under that annual threshold. Also, now this is very important, this refers to the total unemployment income. So let's say you got state unemployment benefits of $8,000 and then you collected an additional $4,000 through the $600 week federal booster through the FPUC program that ended at the end of July. They are looking at your combined income. So in this scenario, it would be $8,000 plus, let's just say $4,200. So on the $12,200 in unemployment benefits, what the federal government considers unemployment income, you would not be paying taxes on the first $10,500 as long as you're below the annual income threshold in 2020 of $150,000. Now, new information is emerging, and I'll tell you exactly what to do if you file your returns and exactly what to do if you have not filed your returns yet. New information that was just released by the IRS and that was quoted in this CNBC article is, let's say you had both the husband and the wife on unemployment benefits. In this scenario, for married couples filing jointly who are both on unemployment benefits, the tax-free amount is double the $10,200. So in this situation, it would be $20,400. But again, the combined gross income must still be under $150,000. Now, it's safe to say that if both the husband and the wife were on unemployment benefits, their combined annual income is going to be less than $150,000. It's not like two people on unemployment make $150,000 a year. It's not like it's raining money while you're on unemployment. Check that out. You guys like that? That's an effect I'm known for by now. But jokes aside, there could be certain situations where, let's say, another member of the family is earning unemployment and then they all file their taxes together, which is why the annual threshold of $150,000 applies. But again, if both the husband and the wife are on unemployment and the annual gross income of the entire family, of the entire household, is under $150,000, then in this case, there would be a federal tax exemption on $10,200 times 2, which is $20,400, which will save several $1,000s for the average family. Now, the only problem with this is it adds more complexity to what is already a complex tax filing season. Remember, the IRS is completely overloaded. They have to deal with the earned income tax credit, the child tax credit. They also have to deal with all the returns that are coming in. And now, mid-season through the tax filing season, they are now experiencing a new change in the tax law because this was passed by the House and by the Senate. So what the IRS is going to have to be faced with now is dealing with individuals who filed their return and who are now expecting a refund, and also issuing guidelines for individuals who have not yet filed a return and who qualify for the $10,200 federal tax exemption waiver because they were on unemployment benefits. In fact, the IRS is already completely overloaded. The IRS this year began accepting 2020 returns starting in February. They normally do so in January because they had to send out the stimulus checks, the second stimulus checks in the month of January. So they were like, oops, I'm completely overloaded. Give me some more time. And now they're probably going to need even more time. They now have to send out the $1,400 stimulus checks to almost 85% of American households. We're talking electronic deposits. We're talking checks in the mail. So it's safe to say that the IRS is completely overloaded. Now, through the 26th of February, the IRS has already received more than 45 million returns and it has processed around 39 million of them, which is encouraging. So some people who already filed their tax returns, who received unemployment benefits, if you're expecting a refund because of this new tax law, you need to think again. your tax return needs to be updated to essentially tell the IRS, hey, the first $10,200 are not taxed. So you will need to amend and refile your tax returns. It's not like the IRS will say, oh, we issued you a smaller refund check, let's issue you a bigger refund check. Unfortunately, it doesn't work like that. So once the bill becomes law, the submitted returns will be incorrect and therefore will need to be updated and resubmitted. So this is where there's a little bit of complexity if you've already filed your tax returns before the bill became law. And this poses new challenges for individuals who file their returns early in an effort to be organized and in an effort to get a refund, but now they find that they have to refile their returns in order to get a larger refund. This is a weird situation in which waiting longer and waiting for IRS guidelines could put you in a situation where you get a larger refund check from the federal government, from the IRS. So what's the bottom line? If you have not filed your tax returns yet, you may want to wait for the IRS to issue guidance, and at that point you can file your tax returns and get a larger refund check if you're eligible for it. But on the other hand, what do you do if you've already submitted your tax returns? Do you immediately submit an amended return? There may be a ray of hope. There is a possibility that the IRS by itself may send you the overpayment, because if you paid federal income taxes on your unemployment benefits and you are not supposed to pay, there is a possibility that the IRS might just send it to you without you having to file an amended return. But we have to wait for additional guidelines. I did mention at the start of the video that the IRS won't do that, but you never know with the IRS. They might actually do that if they get pressure from the White House and from the US Treasury Secretary. Here's a quote from the CNBC article that we referenced earlier in this video. If you already filed your 2020 return but had unemployment income and would have benefited from the new changes, meaning if you were eligible for a waiver of your federal taxes, federal tax exemption for the first $10,200 in unemployment benefits, there's a chance the IRS will take care of updating your information and sending you any money owed, or for that matter, any overpayment that you may have made in federal income taxes. If that happens, it would mean that those people do not have to take any action to update their tax returns. The bottom line is, let's wait for further guidance. But there is a flip side to this. I don't know if we can depend on the IRS to essentially update millions of records and then proactively send out overpayments of the federal income taxes. I don't think the refund checks can be mailed out simply because the IRS is completely overloaded. It's more likely that the IRS will need you to file an amended tax return so that they get the updated information, they get the updated tax returns, and then they say, okay, you're eligible for a refund based on the fact that you already paid, and then they send it over to you. That is more likely. But again, at the time I'm recording this video, we do not have clear guidance. It's best to wait for the IRS to issue official guidance about this. So let's say you do need to file an amended return and you decide to do that. The good news is this can actually be done electronically. I'm talking about the Form 1040X. By the way, on your screen, you'll see the Form 1040X, the physical Form 1040X. And as we scroll down this form, all the instructions for completing the form are actually on this document. As always, we'll provide you with a link to this document, which is from the IRS website, as well as all our references in the description section below. So make sure you check that out. The bottom line is you can decide to fill out Form 1040X electronically and submit it to the IRS. So in 2020, the IRS decided to make the 1040X form electronic, and this form is available with the IRS. Again, here's the form on your screen right now. This is the physical version of the form, but you will be able to submit this electronically. Now, if you filed your taxes through some sort of an electronic tax preparation software, you may need to check with your provider to see how you can amend your tax returns and refile your tax returns electronically, or you could just fill out the Form 1040X and then mail it in to the IRS, although electronic filing is likely to get you your refund much faster. According to Susan Allen, who's a CPA, the crux of the form shows 3 columns: original amount, net change, and corrected amount. The bottom of the first page of the Form 1040X then calculates how much you now owe or how much the IRS now owes you. Let's show you the bottom of the first page of Form 1040X, what the CPA was referring to. Once again, the crux of the form shows 3 columns: original amount, net change, and corrected amount. The bottom of the first page of Form 1040X then calculates how much you now owe or how much the IRS now owes you. So you'll need to do this calculation. You'll need to transmit this information to the IRS, and then the IRS will be able to issue you your refund, assuming you've overpaid and you've already filed your tax returns, and assuming you've paid your federal taxes on the unemployment benefits that are now exempt from income taxes as long as it's the first $10,200. Now, I can understand our viewers and subscribers wanting to file an amended tax return as quickly as possible because you do want to get the refund, but there's no firm deadline for filing an amended return, and you can file more than one amended return if you need to. Generally, you have up to 3 years from the date you filed your original return to send in an amended return. This means that you can take a little bit of extra time to put your amended return together, but if you need the money, you may want to do it sooner rather than later. Also, remember that your unemployment income may be subject to state income taxes. You will have to check with your state. I have done another video on our channel talking about states that are not charging taxes on unemployment income. It's really state specific. Thank you so much for watching. I hope you learned something new about amended tax returns for those who have been on unemployment benefits. And 40 million of our fellow Americans were on unemployment benefits at one point or another in 2020. Thank you so much for watching. I really appreciate you. Please click the like button. Please subscribe. Please enable notifications. That helps out the YouTube algorithm. That helps out our channel. Thank you so much. I hope this was helpful. Please also share this video with a friend or family member so that we can spread this knowledge and we can help other individuals who are confused about what they should do as far as their tax returns are concerned if they were on unemployment benefits in the year 2020. Thank you so much. I'm looking forward to seeing you in the next episode of Ignition Time. Take care. Bye.